Hi, welcome to the Market Alert for Thursday, the 6th of January 2022. So market turmoil as FOMC minutes spark surge in rate hike odds. The entire Santa rally has been erased. So apparently the Fed are talking about being more aggressive in raising rates. And of course that sent the market lower. So let's start off with the Dow. And you can see there that price is hammered to the downside. Let's just have a quick look, ballpark figure of how much they were actually marked down. 530 odd points last night for the Dow moving lower. So you can see already that prices have retraced from these two highs below 89%. So it's got to find support here. If not, we're going through here and we start looking at the bigger fib numbers with 38 starting off at the 20 bar moving average, which is not inconceivable. We'll have to take out this low first. We're already below the 5 bar moving average and it's looking weak already. This is the intraday. We can see that the market moving lower from here to here. They came back to 62% as the Fed made its announcement, and then sailed to the downside, and again looking that way. Now we're through yesterday's low. We've got the S1 here, and if we just compress this a bit, we can see that we've got the S2 and the S3 down there as well, which is always possible. The fear now, of course, is that if the Fed does raise rates, then the market becomes less attractive, particularly that it's blown out of all proportion and the valuations are through the roof. So people will take the money out on that basis, even if it is just small increments. It's starting to feel a bit like January 2018 when the Fed did the tapering then. But by the end of it, they were back to printing. So it'll be interesting to see. Let's put it that way. In the German DAX, of course, playing catch-up. It was a very interesting day yesterday as we traded towards the high. Again, I've got it to record. I traded with the new strategy yesterday, highlighting all of the trades. But I'm getting a bit of a backlog at the moment, unfortunately, because I can't get away from the screen with the trades that are actually turning up. So a bit frustrating. So I'll probably have to do all of those at the weekend and then add them into the members site by the end of next week, unfortunately. But there's a lot of volatility at the moment, which is just ideal for the patterns that I have since found and adding into the software. So we can see that the market getting more or less to the all-time high. Like I say, it was fascinating. You can see the selling coming in there. We've got it here. We had some divergence as well as the market started to lose its momentum with the new year and trading up to that all-time high. Bar a few points, the market's now moving lower. So what I'm looking for here is from here to here. We're through 38, we're through 50. We're sitting at the golden ratio, as it's known, of 62 there at the moment, but we are below the 5 bar moving average. It'll be interesting to see if the market will hold here. If not, we're heading down to 89, and then we've got the convergence there of the 20 bar and the 50 EMA, and then the 200. But that's a lot to get down to, but look, we've done it before. Never say never. You can get some big days when the market starts to roll. I mean, of course, there's always the chance they're going to attempt to try and bring it back as well and say, well, it doesn't matter, we knew that anyway, and then discount what he said, because that's what they'll do if they want to bring the market back. In the 30-minute DAX, again, you can see the same thing. Yesterday it was straight up for the 30-minute DAX, straight off the DP, and it was oversold. There was divergence, and it was just a matter of waiting. We then had an attempt to get back to the all-time high. Then the market just kept putting in fib retracements, and then once the US Fed spoke, or Powell spoke, the market moved to the downside. So not unlike the Dow, you can see a very similar picture there. We're already through yesterday's low, and we're trying to find support at the moment at the S1. We're oversold at the moment, so looking for a bit of a bounce. Need to get back above the 200 MA in the 30-minute chart, and certainly the low if there's any chance moving this back to the upside. And in the 2-minute chart, very choppy. We had a couple of trades in the morning there, but they were only scalp. Market just trading into sort of a sideways range, tried to break out at the previous day's high, then got slammed back and then started to move. So although winning trades, not a lot in those two there at all. And then in the afternoon, we see the market putting in a scalp trade, and then we get a few more points as the market moved to the upside and then went quiet as it waited for the FOMC. Meanwhile, in the 5 minutes, you can see that it removes a lot of the noise, and the market opening up there sideways. But what it does do is this, from where we kicked off in the morning to here, it sits at 62% there. A bit difficult to see, I know. Let me just see if I can expand this. There we go. Comes back to 62, and then the market moves down a bit, and then we get ready to move. You see the momentum starts to switch to the upside, and then continued that way throughout the session. Like I say, I've got that in more detail, which I will add onto the side. In the metals markets, these are likely to get hammered today. They got hammered last night. Now, interestingly enough, the ADP numbers came out yesterday. Let's just have a look at those, and you'll see. Okay, I found the numbers. Right, so they came out at 807,000, and that was bullish for the metals initially. I'll go back to silver now. You can see the market was moving higher. If we go down into a 30-minute chart, this is when the ADP numbers came out. The market liked it, but of course that didn't last long because we got a retracement back to the R1, and then the market waited for Powell. As soon as he said that we're going to increase rates more than expected, it just hammered the price down 50 cents there, and struggling there at the moment as well. So don't be surprised at the fix at lunchtime if they do continue to move this to the downside. I don't know why, because there's no reason to whatsoever. Nothing else changes. Inflation is still going through the roof, but again, it's the manipulation, isn't it, of the market. Gold also down, but not as much as silver, because if you look at the gold-silver ratio, again, you'll see that silver is being hammered more on the downside than gold at the moment as well. And then we've got the dollar. If I can just pull that back up, we've got the dollar. That's gold coming back to 78.89, and then the dollar attempting to move to the upside as well, because there's a prospect of rates being increased. That's bullish for the currency, negative for the metals. Again, some tool that they can use in order to slam the price lower. I don't think this increase is going to take place until March anyway, so bizarre. Well, there you go. Anything to shake out the traders and bring the market back to the upside. As far as the stock market's concerned, just get rid of a few and then attempt to bring it back. So yeah, let's see what happens today, and whether they can bring the market back to the upside. They'll do whatever they can to do this, but unless they all start to get nervous and believe Powell, then it will be a bit of a hammering on the downside. Okay, that's it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.